My name is Sinclair Fleming, CEO of P3 Paper Plastic Products. Every Wednesday, I answer real business questions that come in through WhatsApp from operators, founders, executives dealing with real decisions. No theory, no motivation, just actually how this works in real business life. If you're building, scaling, trying to avoid expensive mistakes, this series is for you. Now let's get into today's questions. Okay, so I'm now getting a loan distribution. How do I organize the distribution of funds? I don't quite know everything about what you mean, but what I can advise is the psychological reason for, I don't know if it's your forced loan. Obviously, if you don't know how to put it together, it may be a forced loan. But the problem is when people get bulks of money from the bank, they've never seen this amount of money in one account before. So they start to get very frivolous with expenses. Now I have a hack that I do myself. I have multiple different accounts in multiple different banks. Also for deposit insurance standard. But if you have a different company account in 3 different banks, make sure the 3 different banks are not American banks. You could pick a Canadian bank, an American bank, a Caribbean bank if you want, if you get to that level. If not, so if it's about, say you're getting $100,000, see if you could go to your bank, your primary bank that you're getting the funds in, and try to have a operations account, a salary account, and a expenses account. So operations is more like your fixed stuff that you're doing, the stuff that you're going to spend bulk of the money on now, the things that you told the bank that you're going to do. Your salary account is what you want to get done. If you want to hire more people, you're doing recruitment, or if you already have people and you wanted to give them some distributions or whatever the case may be, you put that money there. And then your expense account is the things you do with forecasting. What's 3, 4, 5, 6 months in advance. Then you go to another bank and you have a reserve account. If you get $100,000, take $20,000, put it in the reserve account. Do everything else off the 80. Forget that the 20,000 there altogether. Don't look at it. Don't have it up on the dashboard. Don't add it up. Don't do anything like that. Just have it in a separate account that doesn't come up on the online banking in the same way. You don't want to see 80, 20, 20, 20, and then in a different bank 40, and then you're seeing 100 still in one dashboard. You want to see 80, or you want to see 60, or whatever the case may be. If you could have different dashboards for each account, that would even be better. Because what this does, it tricks your mind into understanding that you need to be very efficient with what you're spending the money on. You don't have you don't have 100,000, you have 20,000 for expenses. You don't have 100,000, you have 20,000 for salary. You don't have 100,000, you have 20,000 or 40,000 for whatever fixed expense that you are about to do, whether it's a rent, renovation, buying cars and vehicles, or whatever the business entails. So when you do these kind of things, one, it helps you to reconcile, because all the money is not bulked into one account. So when you're paying salaries, you understand this is how much I'm paying. When you pay expenses, it's easier now to track your cell phone, your rent, your power, your whatever extraordinary things that you have. So when you go on Amazon, it's a lot harder to fill your cart with a bunch of different things. Because when you fill your cart and it's 18,000 and you know you have 100,000, it's easier to press buy. If you fill your cart and it says 18,000 and you have 20,000, it's much more difficult to press buy. You start to remove things. I don't need this. I don't need this yet. Let me get some revenue in first and then buy this after. And the 20,000 that's on the side, just try to leave it alone from Thy Kingdom Come. Also have your salary account in a different thing, right? Try to squall away some money in that salary account. This is like your de facto emergency account as well. So you have your salary going over there if you're not using it, or if it's not in the business strategy. If you're paying yourself an absorbent salary and then you're using that to live, then you picture it how you feel like you need to. But the key is to not have all of the money in one place, where when you log on to a dashboard, you see this figure So this 100,000 that you've never seen, your customer having 3,000, 5,000 in the bank account, recycle it. Now you have 100. You could do everything that you could have never done before. And oftentimes what people do, they do all at once. So even though they're doing something good, they do it at the wrong time, or they do it too quickly. And it causes them to gain a lot of problem and liquidity issues and end up bankrupt, or end up having to take further loans and going to further debt to get back up on the horse again. So a lot of times when people separate the money, it often works out. So the question is, should I use my credit card for all of my expenses and then pay it off when I get the chance? So short answer, no. If you have to audit what type of cards you have. If you have a card that gives you a lot of bonuses and miles and different things like this, and you're a traveler, if you could get rewards for your money, I say go ahead. But a lot of people can't keep up with the payments. This is the issue. You start to pay the minimum payment, and a lot of these cards are 24, 26, 19% interest a month. And people love spending the full, maxing out the card, and then it takes them another 8 months to get back where they need to be. That time they're paying for extra 12 months of credit on these cards, and you see people really get behind, and then again another card to pay off the first card. It's a bad situation if you don't have the liquidity. Now if you're monitoring it correctly and you go, okay, I'm gonna spend $10,000 on this card. I was gonna spend that $10,000 anyway from my business account. I'm gonna spend the 10 on November 2nd, and by November 9th I'm gonna go in and use my 10 from my account and pay it off. You're still gonna incur some fees and different things like this, but at least you would have the points and you would have the money flowing through the credit card account, so later they would offer you more cards or increase your limit or whatever the story may be. So if you have a plan for it and you're using it as actual liquidity to get bonuses, yes. But if you're using it as line of credits and you're gonna pay this thing off or miss payments or pay the minimum, I say don't do it at all. Pro tip, if you're gonna use your card for these things, make sure when you're doing transactions, if your account has a debit card or a credit card, always use a credit card. The credit card is the bank's money. The bank's money is insured. The debit card is your money. Your money is kind of insured, but you have to go through an investigation. They lock your account. You could be very much inconvenienced when you use your debit cards. So if you're in a situation where you have to use a card, use the credit card for your protection, but afterward, quickly pay it off. And watch out for these vendors that charge you 4, 5, 6% just for using the card. It's something that people do. If you could avoid it, do it. If not, try to find a way around it. If you have a question you want covered, send it in. You can WhatsApp it to the number on the screen, or message it through iMessage, Facebook, YouTube, or wherever you're watching this. The more detailed the questions, the better. My name is Sinclair Fleming. Now, go take action. I'll see you next Wednesday.